Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the Australian dollar took quite a severe downturn after the market rejects the top side of the level around 70, 60, 65 and now marks a further down test towards the region that looks at 68.70 as a potential support, having taken out the initial 69.15.35. Meanwhile, at its monthly meeting on Tuesday, the Reserve Bank of Australia, as widely expected, raised its official cash rate OCR for the fourth straight month by 50 basis points from 1.35 to 1.85. The four rate rises bringing the increases now to 1.75 percentage points, for the most seen since 1994. The key takeaway was that the RBA is tweaking forward, complementary to note it expects to tighten further, but is not on a preset path. While inflation is expected to rise around 7% later this year, before declining back towards the bottom side of the range of 3%, where the RBA view in 2024. So looking at the market, we are a little bit weaker into today's session, and let's see if 68.70 can hold, and if so, could see a bounce from there. I don't want to get too bearish in this current pattern until we get further confirmation from the MACD. In the speed of the candle that we've seen here is married up to the RSI, so we are seeing a little bit more weakness into the start of the Wednesday session. Euro posted an outside or engulfing candle and now poses a threat since the rejection of that top side. That was seen at 102.7080 and now looking back towards the bottom side of the range around 101.90. In light of the pattern, the dollar index, which measures the greenback strength against a basket of six major currencies, also posted an engulfing candle after rebounding off 104.80-90 area and surges to a high and settles in New York at 106.30. In light of the pattern, if the market does take out this 101.90, it does give further concerns to the bearish case and may actually see further risk back towards that bottom side of the range around 99.50.80. The dollar yen, well, the market did reach its objective, which was seen first of all at 131.40, and then the next call was down towards 129.70, which was just a little bit short, as you can see. Nevertheless, the market rebounded very sharply and now back towards the closer top side of 134 nearly. In light of the pattern, though, we're not completely out of the woods yet, and therefore could see another round of weakness if the market fails to break above the 134 area. Let's see if we can see that today. If not, then I do anticipate another down test. With the dollar also surging, the pound took some casualties overnight and now dropping away from the top side roughly around 123 and looking back towards the bottom side now, which is around 120.60.80. From there, I do anticipate the market to show a round of demand. Keep an eye on this pattern, not too far away from a shooting star, but nevertheless, the market closing under 55 would give further concerns to the bear case. In light of how the technicals look, we haven't broken down yet, but a move through 1,755 would increase the downside potential and look towards 1,746 to 1,732. Wrapping up with oil, well, the market still remains somewhat heavy, and therefore I still expect or give expectations to the downside challenge, either around 90 as a potential target, with 88 as serving as a broader base. Well, that wraps it for the morning. Thank you very much for joining me. And as always, look after the intraday report. I hope you enjoyed a great start to the day.